You are making a huge mistake if you think investing in real estate means you need to buy property. Because today, I'm going to show you how you can invest in real estate without ever having to deal with tenants, maintenance, or a massive down payment. Real estate investment trusts or REITs are one of the most underrated ways to build wealth in real estate. And the best part, you can get started with as little as $10. In this video, I'll break down exactly what REITs are, how they work, and how you can start investing in them today to grow your money without the headaches of traditional real estate. Stick around to the end because I will share a simple strategy that you can use to maximize your returns and also share with you how you can avoid common pitfalls. If you're just seeing this space for the first time, you're welcome. My name is Anne. I'm a chartered accountant with years of experience in both the banking and insurance sectors, and I'm very passionate about helping Nigerians, both home and abroad, to take better control of their finances by showing them ways they can make more money, save better, and invest profitably. I do this by creating educational videos like this and teaching you in a way that you can understand and relate to. So hit that subscribe button and join this growing community so that you can stay ahead of the game. Every month, I open up a few slots for personalized one-on-one coaching sessions with me so that I can personally help you towards achieving your goals. I'll put the link for you to book in the description below. I look forward to working with you. When most people think about real estate, they immediately picture buying a property, fixing it up, and then dealing with tenants. But what if I told you that there is a simple way to own massive commercial real estate? I'm talking luxury hotels, skyscrapers, commercial buildings without going through all the stress. That is exactly what REITs allow you to do. So what exactly is a REIT? A REIT is a company that owns, operates, or finances income-generating real estate. These companies pool money from different investors like you and me, use this money to then invest and buy properties, manage these properties to earn income, and then share that income with us in form of dividends. This means that you get to earn passive income from real estate without owning any physical properties. You earn in two ways, through dividend payments and through capital appreciation. Let's break it down further. Imagine if you and 100 other people pool your money together to buy a big office building. The rent collected from the tenants of this office building is then shared among all of you based on the amount you invested. That is exactly how REIT works. Except instead of owning just one property, you are investing in a portfolio of different properties managed by professional experts. Now you might be wondering, yes, this sounds interesting, but why should I bother investing in REITs instead of just going on to buy a physical real estate property myself? Here is why. 1. Low barrier to entry. Unlike traditional real estate where you need hundreds of thousands or millions to make a down payment or for total purchase, REITs allow you to start investing in real estate with as little as a few dollars. 2. Diversification. Instead of putting all your money in one property, investing in REITs allow you to have a diversified portfolio of different types of real estate. I'm talking residential, commercial, industrial, and even healthcare facilities. 3. Passive income. REITs are legally required to pay out a minimum of 90% of their taxable income as dividends. This means you get a steady stream of income without lifting a finger. 4. Property management. When you invest in traditional real estate, you will need to be on ground to maintain the property and all the other things that go along with it, unless you want to employ a property manager to help you do all this. But with REITs, you have handed over this management to the experts. 5. Liquidity. Selling a physical property takes time, sometimes even months. But with REITs, you can easily buy and sell just the way you do your regular shares. This offers you flexibility. Sounds great, right? But before you dive in, there's something you need to watch out for because not all REITs are created equal. Have you liked this video? Please hit that like button now. Thank you. There are two major types of REITs. We have the equity REITs and the mortgage REITs. Equity REITs own and manage properties, collecting rent as their primary source of income. This is the safest type and also the most common. Mortgage REITs, on the other hand, don't own properties. They lend money to real estate developers and earn money through the interest they charge. This can be riskier because they depend on interest rates and economic conditions. Then, there is a difference between publicly traded REITs and private REITs. Publicly traded REITs are listed in the stock exchange, meaning that you can buy and sell them easily. Private REITs, however, are not publicly traded. They require higher minimum investments and they give less transparency. This makes it an easy choice for scammers to try to use and scam people of their hard-earned money. As a beginner, it's best to start with publicly traded REITs. Talking of scammers, I need to bring something serious to your attention. Some scammers are creating fake profiles using my name and picture to try and deceive people. They are messaging my followers and subscribers, promising quick money-making schemes. Please note that I would never DM you to offer investment opportunities or ask for money. If someone messages you claiming to be me, please do not engage. Report and block them immediately. Let us stay safe and vigilant. If you would love me to personally coach you and guide you on your investment journey, then take advantage of the few slots I open every month for my one-on-one coaching program. I will leave the link in the description below and in the comment section. In Nigeria, REITs are still developing, but they offer significant potential. The three main publicly traded REITs in Nigeria now are UPDC REITs. This focuses on residential and commercial properties in Lagos and Abuja, offering consistent rental income and is managed by Stanbic IBTC Asset Management Limited. We also have Skye Shelter Fund, SFS REITs. This invests in office buildings, residential homes, shopping malls, hotels, and warehouses, mainly in Lagos. We have UH REITs, which does more of residential homes in Lagos and Abuja, providing stable dividend income. These REITs I just mentioned trade in the Nigerian Stock Exchange, and you can purchase shares through your registered stockbrokers. The Nigerian real estate has massive growth potential, especially in commercial spaces and urban developments, making REITs a great way to get exposure without direct property ownership. A REIT exchange-traded fund, that is a REIT ETF, is another fantastic option. Instead of investing in a single REIT, a REIT ETF holds a basket of REITs, spreading risks across multiple companies. This strategy helps maximize diversification while reducing exposure to one single REIT's performance. Popular REIT ETF include Schwab US REIT ETF, symbolized with SCHH, SPDR Dow Jones REIT ETF, symbolized with RWR, First Trust S&P REIT Index Fund, symbolized with FRI, iShares Core US REIT ETF, symbolized with USRT, JP Morgan Beta Builder, symbolized with BBRE. The biggest advantage of REIT ETFs is diversification and lower risk. Instead of worrying about picking individual REITs, you simply go for one ETF and instantly gain exposure to different real estate investments. So how do you pick the right REITs to invest in? 1. Look at the dividend yield. The main reason many people invest in REITs is for passive income. A high dividend yield is good news because that means more money to your pocket. But be cautious because if it is too high, it might not be sustainable. 2. Check the property portfolio. Some REITs are focused on office buildings, which for some time now have been struggling because a lot of companies are now going remote, while others focus on warehouses, which are currently booming. 3. Debt levels matter. Most REITs take on debt to acquire properties, but too much debt can be risky. So take a look at its debt to equity ratio to make sure that they are not over-leveraged. 4. Past performance. While past performance does not always guarantee future success, a REIT with consistent growth and dividend payments over the years is always a safer bet. Now, let us talk about risk. Are REITs completely risk-free? No. Like any other investment, they have their downsides. Market downtimes can impact property values. Interest rates can affect mortgage REITs. and bad management can lead to underperformance. But with the right strategy, REITs can be an incredible wealth building tool. So where do you start? If you're a beginner, stick with publicly traded REITs with strong track records. Both the Nigerian REITs and the US REIT ETFs mentioned in this video can be found and bought on the Bamboo app. And here is a pro tip: reinvest your dividends. Instead of cashing out your dividends, why not reinvest them so that you can compound your returns over time and grow your wealth faster? REITs offer a powerful way to invest in real estate without the hassle of owning properties. Whether you're investing in Nigerian REITs, global REITs, or REIT ETFs, these assets provide diversification, liquidity, and passive income, making them an excellent choice for both beginners and seasoned investors. But like any other investment, they come with risks, so make sure you do your research and invest wisely. If you found this video helpful, don't stop here. Click on the next video showing on your screen right now to go on and learn more about building passive income streams that can set you up for financial freedom. Till I see you in my next video, keep dreaming big and keep working hard towards your dreams. I'm rooting for you. Bye for now.